Hi, I'm Stephen from Trifolium Economics and Financial Accounting Tutoring, TEFAT, and today I'd like to give a presentation on disposal of non-current assets, DONCA. I'll just set up the tripod. So, DONCA is the acronym for disposal of non-current assets. What we mean is, what is disposal of non-current assets? It's when you sell a non-current asset, such as a tractor or a car, and you realise a price in the used market, and after that event has occurred, some general journal entries have to be written up and general ledger. And first we'll start by working out if there's either a gain or a loss on the sale of the asset, which might be about mid-term in the asset's life, and the finance manager has decided to sell the asset in the depreciation schedule timeline, sell it a bit earlier than the scrap value, which is the end of the asset's life. Okay, so it's sold, say, around the mid-range of the life. So this is the formula. For a gain or a loss, it's equal to the sale price of the sale of the asset into today in the market, whatever price they got for it in the used market, minus the historic price of the asset, what you paid for it originally back at the start of the timeline, less total accumulated depreciation. And a total accumulated depreciation is adding up all the depreciation schedule of all the periods, all the years along the way to the date of the sale. So in effect, that historic price less total accumulated depreciation is the book value, the written down value. And that actually sits in the balance sheet. You got historic price less written down value. Historic price less total accumulated depreciation gives you written down value, the book value, and the balance sheet in non-current assets. So that's your formula there. Okay. Just reiterating that the gain or loss is equal to the sale price of the asset today minus the historic price, what you paid for it originally, less total accumulated depreciation, which is all your depreciation expenses in the timeline. So an example is, say the asset was sold for $26,000 and it had a book value, that figure, of 25k. 40,000 minus 15,000, right? So there's a gain here because 26,000 minus 25,000 gives you a gain of 1,000. So I'll just write in another line. So 26k minus 25k, k being short for thousands. So you can see here 26,000 minus 20,000 gives you 1,000. That's a gain because you sold it for 26,000, which was higher than the book value. And that would be, so the sale of the asset in the market, 26,000, is greater than the written down value, a gain of 1,000. That figure outweighs that figure. 26k is bigger than 25k, the book value. So that's a gain. An example of a loss with the same written down value is the asset was sold for $16,000. So you calculate $16,000 minus the book value, written down value. 16,000 minus 25,000 gives you a loss situation of 9,000. The difference between the realised sale and the comparing it to the book value. And always write your negative figures in brackets. So I should have probably put a minus sign here, but in bookkeeping you put that loss in brackets. Any negative figures go in brackets in bookkeeping. And just explaining this, yeah, so loss situation, written down value, book value greater than the sale of the asset realised, 25,000 greater than 16,000. But again, is where the sale of the asset realised is greater than the book value, giving you a gain. 26k is greater than 25k, as we mentioned. The gain, getting to the financial statements, the profit and loss statement, also called statement of financial performance, the gain is put in non-operating profit. Now, operating profit is your main core business while you're in business, for example, a shoe factory, but the shoe factory business has other items of profit which is away from the shoes, distant from the shoes. It's called a non-operating profit on the P&L, and it's written usually below the operating profit. If it's a loss in the P&L, you put the loss in non-operating expenses, normally written below total operating expenses. Okay, so non-operating expenses is your loss, gain, non-operating profit. Non-operating profit, non-operating loss for the two types of situations. So again, just make a note of that formula, or simply compare written down value to the realised sale to get gain or loss. Going over the board. Just check that that's in focus. Right. So now we've got to write some general journal entries for these transactions, and your go-to type account is called disposal of non-current asset, which crops up in all these general journal entries, DONCA, or disposal. And the general journal format, as you know, you've got a date, a debit and a credit, and a brief description of the transaction. I might not have a date. I haven't got a date for all these. There wasn't enough room, but I kind of did put a brief description, but not with the company XYZ. This is just kind of theory entries, not an example. So the first, debit and credit, selling, realised sale of the used asset. Debit bank, 26,000. Bank is a current asset. Credit DONCA, 26,000, or disposal. That's the first general journal entry. The second general journal entry is just a description. It's when you've got to adjust the non-current assets. So you credit machinery, $40,000. Usually non-current assets is a debit in the balance sheet, but it has to be reversed out, and you debit DONCA, right? Just getting back to the first one, back to the realised sale, you debit cash and current assets in the balance sheet. Also record that in your cash flow statement as well, in investing cash flows. Enough of that. Back to the second journal. Usually the non-current asset is a debit in the balance sheet, but we've reversed it out, so now it's a credit item. The third general journal entry, the third one is you take care of accumulated depreciation in the bookkeeping entries after realised sale. Now, accumulated depreciation is usually a credit item in the working life of the asset, but when it's reversed out, something different occurs. You actually debit accumulated depreciation, 25,000. That's the total accumulated depreciation, and you credit DONCA, 25,000. Okay, so that's the third general journal entry. And as you might, as we mentioned, you might be unfamiliar with debiting the accumulated depreciation. But remember, we're taking this machine or car off the books, and eventually it'll just go off the balance sheet for the year, and it'll be business history about that car or tractor. So we're getting that asset off the books, and eventually it'll go off the books of the financial statements as well, off the financial statements. The fourth entry, general journal entry, is that one. You deal with the profit or loss. In this case, a profit. So you credit profit on disposal of asset, 1,000 we made on it, and income in the P&L is always a credit item, and your corresponding debit is DONCA. Now, again, what makes it easier for this to remember is that disposal or DONCA goes in all these general journal entries. So DONCA is your go-to account in this. Similar to how bank is a go-to account in another series of transactions, but in this one, bank is only one, the realised sale. So DONCA's your go-to account, and the description is profit on disposal of asset, $1,000. And also that's got to be put into the profit and loss statement. A lot of these items do. And that goes in, as we mentioned, non-operating profit on the P&L. So I think that covers that whiteboard. And now, of course, we've got the general journal entries. Now we've got to post them to general ledger over here. So general ledger is the title. And DONCA is the main type of focus account here. We're focusing on in the middle, and all the other accounts, loss if there was one, profit on sale of the asset, accumulated depreciation, T-shaped ledger, machine, non-current asset, T-shaped ledger, and bank ledger, bank being in current accounts on the balance sheet. So we see the general journal entry, and I'll just get my notes on this because I've covered the general journal. So at the start, the first transaction is disposal of the bank one, actually, the cash received from the sale of machinery. So in the general journal, we've debited bank and credited disposal of non-current assets. Now we go with that $26,000 figure of bank, we go to the bank ledger, the debit, but we label it disposal. Okay, so that's the first entry. The corresponding credit is go to DONCA on the credit side, the right hand side, and label it bank. How much we got for the sale, 26,000. The next posting is machinery, and so we know our general journal entries, DONCA 40,000 and credit machinery 40,000. So we go to DONCA first, and we label it the debit machinery 40,000. Then we go to the machinery general ledger, and you credit the machinery $40,000, and label it, but label it the opposite thing, disposal. Okay, so that's the second general ledger posting. Then we deal with accumulated depreciation. Remember, the general journal entry was debit accumulated depreciation on machinery as a total figure and credit DONCA. So now I go to accumulated depreciation on the lower right side. You debit accumulated depreciation on the machinery, but label it disposal on the left hand side of the accumulated depreciation ledger. Also go to DONCA on the right hand credit side and label it accumulated depreciation 25,000. Okay, so that was that posting. And finally we deal with the profit on the sale of the machinery. We don't have to mark anything for loss. We only needed it if we needed to, but in this case it was a gain. And the debit item is DONCA, $1,000. The credit is profit on the disposal of the asset, $1,000, consistent with the P&L income a credit item. So you, in the profit on the sale of asset, right hand side, credit side, you label it DONCA, $1,000, and which is consistent because income is a credit. And in the DONCA account, you label gain of the sale 1,000. You go to the DONCA credit. You go to the DONCA, and it is a profit on the disposal of the asset, but you label it gain. Sorry, I might have got, this could be incorrect. I'll just check up on that. So we debit DONCA. We know that the general journal entry is debit DONCA and credit profit, right? Just double check, might be okay. So then we go to DONCA and label it gain on the debit side. Yep, that's correct. We go to the profit on the sale side, the credit. We label it disposal. Yes, that's correct. That's correct. Now these figures don't add up just yet, but we'll wait till the end of the period for the trial balance and see what else is in there. But that is correct. Let's just double check on that. Firstly, bank, the sale. You go to the bank ledger, label it disposal, 26,000. Go to DONCA, the credit side, and label it bank, 26,000. That's correct. Just check these off. I don't mind checking. And with machinery, well, we've credited machinery, so that's consistent. And with DONCA, that's the correct figure. And so accumulated depreciation, normally a credit item. We've put it in here as disposal, that's correct. And the corresponding on the right hand side of the ledger is accumulated depreciation. That's the same figure. All right, and then with the profit, you go to the profit of disposal of asset, credit item, label it disposal, and then in DONCA on the left hand side, the debit side, label it gain on sale 1,000. That's okay. Yeah, sorry, I was just a bit worried that I might have had an incorrect entry there, but if you're unsure, just double check. That doesn't balance, by the way, but It's all good. They're the correct entries, right? We would just close off that with a you add up both sides. So this is how you close off an account. 26,000 plus 25,000. That's 51,000. 51k. Then you add up your debits, 5,000. And then the difference between 51,000 minus 5,000 gives you 46,000. So this 46,000 becomes balance brought forward. It is, yeah. Brought forward. That missing figure. 46, because the debits and credits were unequal, that's 51,000, that's 5,000, the difference is 46,000, that's balance brought forward. In the next period of DONCA, that would be balance carried down, opening balance of DONCA 46,000, but it should be cleared off the financial statements by that stage, and you wouldn't have an opening balance of DONCA. But if you have unequal accounts, just add them all up, the debits and credits. If debits don't equal credits, find the missing figure, and that's called balance brought forward. Normally that's your balance carried down, your opening balance for in the next period, but not in DONCA's case. Now, where do some of these items go in the financial statements? Well, bank is in the current assets and balance sheet. When referring to financial statements, machinery is non-current assets in the balance sheet. Profit on the sale of the asset is non-operating income in the P&L. If it was a loss, it would be non-operating expenses in the P&L. And total accumulated depreciation sits in the balance sheet just below historic costs. So historic costs less accumulated depreciation gives you written down value in the non-current assets in the balance sheet. So that's the finish of the presentation on DONCA today, given by Stephen from TEFAT in Sydney. I hope this found this informative, and I hope it cleared up how you post DONCA in general journal and general ledger, and mentioning financial statements. Bye. See you next time.